What's up, guys? Welcome back to the channel. We are going to go over options, and I guarantee you, even if you do options or don't understand options, just watch the video because, you know, this is not going to be a regular option video. This is going to be breaking down simple things in plain options that most traders don't even know. Like, it took me years to get this kind of information and losing money and losing and winning and losing. Now, I'm going to go over this, and I highly suggest checking this out. Alright, guys, and by the way, we have a Discord. It's in the description of the video or in the comments. We are like a family if you want to come in. We are doing a giveaway for $1,000 at the end of December. If you want to check us out, just sub to the channel, and you can easily win $1,000 if I pick you. So I'm going to go over this, and I'm going to talk about options. There's a couple things I want to go over that there really isn't any other video like this, and that's why I'm making this video, because it really makes me upset that, you know, option videos, or when people look it up and learn how to trade, they don't talk about this. They say, well, look at that. Guys, just check this video out, all right? Okay, so getting into options, there is a couple rules that I do that pretty much will make you a very good trader in options, or even shares. I mean, you can use this basic information to, like, you know, trade in shares. Now, the biggest thing to understanding options is market movement. You cannot watch one index. You cannot watch one stock. You have to understand market movement. So like this. You know, this is December 22nd, I think, right now. So on December 22nd of 2023, right now, all these tech companies like this, like Meta, are at resistance. NVDA is at resistance. Google is at resistance. AMD is at resistance on the daytime frame. Yeah, there we go. Is at resistance. Amazon is at resistance on the daytime frame. On the indexes, we are at resistance. On the triple Qs, we are at resistance. I mean, even on the Dow, we're at resistance also. So, you know, that's the thing too. You have to look at the market as a whole as a trader. I mean, even the Russell 2000 is at resistance. So that's what you have to do. Now, the biggest thing in understanding the market is rotation in the market. So like, if you have, you know, 7 stocks at resistance, 6 indexes at resistance, that is huge. Okay, that means we're most likely going to reject because the market moves as a whole. Now, the biggest thing too is when you're trading options is to wait for the perfect time. Like, the biggest thing I've seen traders do is they'll come through here and they'll play in between here, play. That is the most, I can't say that word. That is the most rookiest move that you can do. The best time to play options are at resistance. So like right here, or like right here, or right here, or right here, or even at support, like right here, you know, or maybe right here if you wanted to do that at that time. That's the biggest thing. Don't do options in the middle of a trend. And if you don't know how to chart, follow the channel. I go over charts. You know, if my charts are looking really good, then, you know, I talk about what the market's going to do and I break it down. So if you are doing options, follow this channel. I guarantee you it's going to help you way more than any other channel. Like, I mean, Ricky doesn't even do this. I mean, FX doesn't even break it down like this, or Ron. Like, don't. That's the biggest thing. That's one of my biggest things I don't understand. Now, there is one more thing too. So when you're doing options, right, do not do over around 1.5 months out, or do not do 1.5 months under. So like, if you're picking a strike price around 1.5, or sorry, 1.5, 1.25 months out. So like, you know, 5 or 6 weeks, that's the sweet spot. Because the reason why is, let me show you. So like, well, I don't have that up. So you can go look at it on yourself. So if you go look at like strike prices, or, you know, just in anything in general. So like, say if you go look at something 4 months out, those contracts are going to be $5 or $6. That's insanely overpriced. Because like say if you buy something at 5 months and something doesn't go your way. So say if we trade sideways like this right here. So we traded sideways from August to October. That is a long time to be holding those. So if you're holding something for 3 months and you pay $5 and a month and a half comes, those contracts are going to drop down to $2.50, $3. You're already 50% down by just holding them. So don't do that. Now, if you buy something around, not financial advice in the whole entire video, forgot to say that. Now, around 6 weeks in a contract, the decay from, something being 3-4 months old, the decay has hit them just enough where they're around, $1.25, around the strike price. Now, the thing is, when you're doing this, like, just be very careful, because if you overpay for a contract and say the decay hits, if you buy something, 3 months out and then you hold and you only got 2 weeks left, you're definitely not going to break even. You're going to take a 80% loss. So that's my biggest tip, is about 6 weeks, right? Now, there is something else. So when you're picking a strike price, so like say if you want NVDA, right, or Google or AMD, the best way to pick a strike price is looking at the charts. So like if I'm looking at Tesla and I want a strike price, the best way to do is look at your support or your resistance. So like right now we're at resistance. So if I'm looking like, hey, I want to, short the market, what strike price should I look at? So I would look at my support and look at right here. So 189, so 190, right? I would do 190 strike price, mostly due to if this drops down here, then you're going to have gains completely all the way down. Now, if you're one of those traders that don't understand and you pick a strike price all the way down here, like down here, the decay is going to destroy you. Because the reason why is, say if you buy 6 weeks out and say you do get this drop, say it drops and it drops. Now you only have 3 weeks out and it's already hit support and you're only up 50%. The thing is, you're going to need something to drop all the way down here if you pick a strike price down here, like for gains to start pumping in those contracts. That's not good. So what you want to do is, like for me, or like right now, what I'm looking at is Meta. So Meta's support is around 310. So what I'm going to do is, not financial advice, is I'm going to pick a strike price at 310. So all the way down here, it's going to, be gains pretty much all the way. You don't have to worry about being in the money to make money on contracts. It's not that hard. Now, the thing too also is, if you pick too far out of the strike price, it's going to take more of a drop for those gains to come. So being at support, you have a high chance of hitting support. So that's the point. So just remember that also. And then also, one other thing too is, if you are picking a stock, so like Google's right here and it's at resistance, right? So say if it rejects and it drops down to, say, support. On Google, since it's not that big, because every tech company has a bigger percentage of how big it is in the market. So Google, say if it drops to support, you'll probably make 200%. But on Meta, since it's way, way bigger, now if you drop down from resistance to support, those contracts can pump 800-900% because Meta is bigger. It has more power. So you have to decide what stock you're going to pick, because it really comes down to your outcome on the gains. So don't forget about that either. And then also time frame. Now, what I've learned too is, I've seen a lot of traders, what they'll do is they'll go on the day chart, they'll look at something and they'll be like, okay, well, the triple Qs is going to drop and I'm going to buy a strike price down here because someone on YouTube says we're going to have a black swan event. That is the most rookiest move you can possibly do. What you want to do is pick a good time frame. Time frame. So my best time frame that I look at is like, so if I go to Meta, right? My favorite time frame is the 1 hour time frame. that is probably your most aggressive, output in gains, mostly due to, if you look down here, like the months, like June, August, October, December, you have a move every month and a half you can make. So every month and a half, you can hit that 4, 5, 600% by just charting and stuff. Now, if you're one of those guys that are like, well, this YouTuber told me that we're going to drop down to 260 in the triple Qs tomorrow. Guys, that is unrealistic. That is rookie. Don't do that. Sit on the 1 hour time frame. Play these smaller time frame channels. I'm telling you, it's going to be way better on the outcome. Don't try to predict the market like that kind of way. You can predict the market, not financial advice, but you can predict the market on these smaller time frames. It's not hard, because if you have all these indexes and all these stocks at resistance, it's common sense what the market's going to do, because they all move together. All right, so now let's get into the good stuff, okay? So the biggest thing is so how to see what your contracts will pump to if you are in the money. So say say you want to find out what your contracts would pump to. Say if you buy 310 strike, right? Well, the best way to see what those contracts can pump to at that time, you have to realize that at that time, the best way to is go look at the contracts in general. So let's look down here. So say if Microsoft rejects and has a crazy drop like this, that's common. So say if we drop and we hit support within 4 days, right? What you can do is, if you want to see where your contracts are going to pump to, so let's go down to the contracts. So right now in the in Meta right now at this top right here, go to your contracts and look at what that contract's worth in the money. So right here, the stock price is at 353. So go right above it at 355. These are worth $10.55. So that's what you can look at, to give you an idea of what would happen if you, have that stock go hit that support right away. That's what those contracts will pump to. Now, if you go buy, if you go buy the strike price right now, if you go look at the contracts right now for around, 310 on Meta, those contracts are 80 cents. So if Meta does something crazy, right, and it drops to support, that 70 or that 80% or that 80 cent contract can pump up to $10, $9. That can give you an idea of what those contracts will pump to. So if you're looking at, every contract, and that's the thing too, every contract's different. Now, what I've noticed too is I don't trade $half contracts. So if it's $1.50, contracts or whatever, those contracts are different than, even across contracts. So that $1.50 contract is different than that $2 contract on the outcome of gains. I don't know why it does that. It's like that. That's why I stay away from $half contracts. So stay away from those. Try to stay at a even number, just straight across. You don't want to do those kind of contracts. So I don't recommend those. But here's an example, right? So they're worth $10 if you're in the money, okay? So if you go down to the support, which I highly recommend buying strike prices at. So right now I have 13 contracts at 310, not financial advice. So at 310 strike price, they're at 81 cents. So if some reason Meta drops to support, those contracts are going to pump to around $10. So that's a good way to tell what your contracts would be. And yes, every date is different. So make sure every time before you buy, check up on the outcome of them, because some are different. Some are even worth it. Every date's different, and that's the thing. That's what the market does. It fools you. It makes you think oh, well, I got 300% this week. I'll do it the same, a week later, it'll be the same outcome. It's not going to be. So just throwing that out there. Okay, let's get to the good part. Decay. Decay, a lot of, or like the decay, a lot of people get confused about decay. They're like, oh, well, if that is this, da da da, or, it just blows my mind. It's really simple, honestly. The way I look at decay is how high my contracts will hit if I'm in the money at that time. Like, say, if the meta drops down to 310 right off the bat, what would my, contracts be at that date? Now, let me show you how to understand. So if we go across, right? So if I pick June 19th, right? So here's June 19th. So right now on June 19th, those contracts being in the money are worth $10.55. Now, let's say you're a week shorter, right? A week shorter, those contracts high being in the money are only worth $9.40. And that's, a week less. Now, if you go another week less, July 5th, those contracts being in the money are worth $7.60. So that's how you can understand decay. Now, if you go a week less than that, right? Let's go to December 29th. It's December 22nd right now. Now, if you're in the money, those contracts are worth $5.35 if you are in the money right off the bat. That's what you have to understand. So, it's really important to time these contracts out. Never play in the middle of a trend because it's going to eat you alive. So if you are confused about decay, that's the best way to understand decay is, the less time that you have, you're going to take a hit. So like that June 19th contract, they're worth double, So if you are, only a week away, those contracts are already going to lose 50%. So just make sure that you buy over 1.25 months out, 6 weeks. That's the best opportunity. Now, if you are like, a week away, there's a way to, jump options. Okay. I call it jumping to keep them alive. Now, when you were jumping, a lot of people call them rolling options. I don't roll options. I think it's a scam. I think the market, I think the government does it to pretty much just take free money because you pay 1 cent, you pay the difference on the contracts. Now, what you can do is you don't have to roll your options. What you can do is now, here, let me pull this back over. Okay, so this is kind of confusing. The best way I can tell you is try it out. Do like 1 contract, 2 contracts, and then try it out. You'll see what I mean. Now, what you can do is not pay for that rolling fee, okay? Now, what you can do is say if you buy 6 weeks out, you only have a week left, right? You paid $10 for those contracts and they drop down to $5. So, the drop is coming. It's not, it's very close, but the thing is, decay is right around the corner, and eventually, if you wait long enough, those contracts won't sell. So what you can do is you can sell those contracts, okay? And when you sell those contracts, a lot of people get confused because when you sell those contracts, yes, you take a hit, okay? But you can break even on that drop when you do hit that drop. So when you sell those contracts, say you buy 30 contracts for $10 and you take a 50% loss, right? So those contracts you take a loss on, what you can do is you can buy a new fresh 6 weeks out contracts and then take that money, and yes, you'll end up less contracts, but it's not about contracts. It's about the amount of money you put in. So if you take that loss, you buy new contracts, and then what you can do is when you buy new contracts, it gives you the opportunity to have a bigger outcome, right? So it gives you a bigger outcome on those gains. So like say, say you're right at this top, right? And it's not dropping, the top is just floating. And what you want to do is sell those contracts, buy new contracts, and then when you hit that drop, what it will allow you to do is, when you have fresh contracts, those contracts are going to pump even more than the contracts that you have that are only a week out. Like say if you buy not meta contracts because they're kind of expensive, the dollar amount is kind of different. You know how it is, when you buy contracts, the longer you wait, the less they get, right? But if you hit this drop on new contracts, you'll get a bigger percentage output on those, you know, contracts, and it will make up for those losses, and you can break even. If you don't know what I understand, you can always come to the Discord and I can explain it more in depth. It's kind of confusing, I know, but just try that out or just look deeper into it. But just remember, guys, it's not always about how many contracts you have. It's about how much cash you put in, okay? Like, that amount of contracts, you know, it doesn't matter. And to those people that are like, well, I paid 2 cents for these contracts. Yeah, you probably paid 2 cents because those contracts are out of the channel. They're unrealistic. Nobody's going to buy them. So Decay just destroyed them. Now, like if someone comes along and goes, well, I bought, you know, 260 or 270 strike price, and they were 2 cents. My guy, the drop right here is going to be very rare, it breaking support and going and going and going. The chances of that happening is super small. Yeah, if you want to take the risk, go ahead. You know, that's on you. But play the channel, guys. I'm telling you, it's worth it. But if you want to come in and learn options, I do one-on-one classes. It's super cheap. It's not a Ricky $500 class course. It's literally $50. You know, you can come in, you'll make $50 definitely on your first trade, and it will literally, the trade, I post trades. I have, not financial advice, but I have 5 or 6 trades posted up in my member chat, you know, my paid member side. So if you want to come in and look at my, you know, track record, you want to look at my plays, you know, or just, you know, look around, you can come in and I will absolutely help every single person. But I am doing a promo only on this video because you watched the whole entire video. So if you come in, you buy membership, you can bring a buddy for free. So I hope this video helps. It's not really, you know, I know it's confusing. It takes time. You know, and the biggest thing is you have to take losses to get your gains later on because you have to pay for experience. Nobody in this world went into options on day one and became a millionaire. No one. I guarantee you, if that person did, they had a team. But I hope you guys have a wonderful week. I hope this kind of video gave you a little bit more insight on the options. If you have any questions, hit me up. Later, guys.
Testing. 1 million, 2 million, 3, okay. Testing. 1 million, 2 million, 3 million. That's working. Okay. Testing. 1 million, 2 million, 3 million. Well, you can always hear that anyway.